So over the last few years, we've seen that the human-initiated digital attack rate across our clients has increased year on year. So in 2022, it was up 20%, followed by a further 19% growth in 2023. Last year, we only saw 1% growth in that attack rate. Basically, the percentage in attack volumes increasing was only slightly more than the percentage increase in good customer transactions. So the attack rate was essentially flat. What we didn't see yet in 2024 was massive use of AI by fraudsters, but we do expect this to change, and that will drive increased volumes of attack, which are also likely to be much more professional and sophisticated. That's why we feel right now we're probably in a relative period of calm before that next storm. But let's bear in mind that we still saw 1.5 billion human-initiated attacks last year across the LexisNexis Risk Solutions Digital Identity Network. Well, the first thing that's generally talked about these days when we're talking about online fraud is scams, and they're a massive problem. But in 2024, the number one reported category of fraud across our client base was actually first-party fraud, and it's the first time that's been so. And this type of fraud generally involves the consumer being somewhat untruthful in a variety of different ways. So to give you a couple of examples, they may be applying for an online loan, like a buy now, pay later loan, and they'll withhold some information that would make them a more risky applicant. Or alternatively, if it's online payments, they may have claimed that someone else used their credit card without their knowledge, or even that the goods that they've ordered have never arrived. First-party fraud is known to increase during times of economic pressures, so inflation, rising cost of living, often coupled with rising interest rates. So this jump in reported first-party fraud is actually not that unusual. It's important then to have capabilities that detect different types of fraud, not just scams, not just traditional unauthorized or third-party fraud, but now increasingly this first-party fraud. So scams and mules are deeply interconnected because in order for scams to be successful, they need mule accounts to be available for victims to transfer their money into. And then more mule accounts are needed because that money then needs to be quickly moved on through the financial system, basically making it untraceable. And we see this in our data. For example, in the UK, mule-related money movements increased 65% year over year. If we look at data from our UK banking consortium, we saw that last year, money mules attempted to move the total amount of payments of 130 million through these mule accounts. And these networks often include multiple mules and multiple banks, making it really challenging for an individual bank to trace that flow of money. This interconnected nature of scams and mules highlights the importance of banks collaborating together and sharing data to a certain extent to enable both scam detection and mule detection models to be as effective as possible. So the LexisNexis Risk Solutions Cybercrime Report is based on an extensive analysis of attacks detected across our client base for a full year, in this case from January to December 2024. And that report considers digital intelligence from over 104 billion transactions. And that includes new digital applications or account creations, logins, payments, as well as other less common events like password resets that also then carry a heightened risk. And fraud models then use hundreds of attributes to assess the legitimacy of transactions, including things like device identification, geolocation, previous history, and behavioral analytics. And we have dynamic digital identities that are created by merging this online data together with the transactional data. Comprehensive approach then allows LexisNexis Risk Solutions to provide this global view of risks and tailors fraud detection policies specifically for every individual organization that we have as a client around the world, but then enables us also to look from a holistic point of view at what are the global, regional, country-level trends, industry-level trends that we see year on year and how they change.